Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi. It is 30th of August 2023 and here are the questions that we will be answering for you today. What does Reliance AGM tell about its succession plan? Can DRDO replicate Isro's success? Time to buy PVR-Inox stocks amid strong box office collections. And what is quiet cutting? The succession plan of India's largest conglomerate, Reliance Industries, has now been cast in stone. During the company's annual general meeting on August 28, it was announced that Akash, Isha and Anant will soon be inducted at RIL board as non-executive directors, even as their father Mukesh Ambani will remain at the helm for another 5 years. A host of other plans were announced at the annual meeting of the oil to telecom conglomerate. So what did Reliance AGM tell us about its future? Kasturi Akhil and Debarghya Sanyal offer a bird's eye view.
Reliance Industries chairman Mukesh Ambani has already set in motion a strategic plan for succession of the company. Speaking at the company's annual shareholders meeting, Mukesh Ambani said Isha, Akash and Anant Ambani's appointments were approved by the board of directors in a meeting earlier in the day. Neeta Ambani stepped down as director of the board but would remain chairperson of the Reliance Foundation. The 66-year-old also said that he would remain chairman and managing director for 5 more years and mentor the 3 third-generation Ambanis. 2 decades ago, Reliance's founder Dhirubhai Ambani passed away without a will or a clear leadership transition, stirring a bitter feud between Mukesh and his younger brother Anil. Reliance was eventually divided up following the intervention of their mother. 3 years ago, Ambani began including his children in major family business decisions, involving them in talks with the Meta platforms to secure a $5.7 billion investment. Formal roles have been carved out for Isha, Akash and Anant in Reliance's energy, retail, telecom and digital services arms. The next-gen Ambanis are already steering their respective subsidiaries through crucial milestones. A week back, Qatar Investment Authority announced an 8,000 crore rupees investment in the Isha Ambani-led Reliance Retail Ventures. The investment boosted the company's valuation to nearly $100 billion. At the AGM itself, Akash Ambani, headed Reliance Jio, also announced the launch of Jio Bharat, a 4G-enabled affordable phone with smartphone-like features that also supports UPI payments. Further, the setting up of the Dhirubhai Ambani Green Energy Giga Complex at Jamnagar, among other clean energy initiatives, under the aegis of Anant Ambani, will pave the way for RIL's attainment of its net zero carbon targets by 2035. So what does this mean for the company's governance going forward?
Obviously, I think when the young generation comes into the business, they are first groomed by the professionals. And thereafter, I think they are slowly and gradually inducted into the mainstream. Finally, I think the destination board will happen. I guess I think that same transition has happened for all the 3 young Ambanis in the company. Each one of them have been given an individual portfolio.
Nobody is expecting anything dramatic from the 3 kids itself. A company is not defined by 3 individuals, and that to the size of Reliance Industries. There is definitely large opportunities out there, and it needs to be seen how each of the kids get involved in this and grow these businesses. And for shareholders to expect is that whatever business has been done in the past, that is continued and built upon.
What are some of the major challenges that the transition can pose to the company's growth outlook?
Because each of these companies, even though they are separate companies, they are yet to get demerged from the mainstream Reliance completely and get separately listed. Once they get separately listed, I think the parent Reliance will have to take care of the interest of all the shareholders. And that is where I think they have transited them from individual companies where they were board members and our board members to the mainstream Reliance, where now they are going to look at the overall interest of all the stakeholders and the shareholders.
This is just a first step towards a transition. As I told, first is what are their responsibilities or increasing responsibilities going to be. Two is how are the assets going to be divided. That will pan out over a number of years. So only those are the, I would say, the larger challenges for the family itself. And for the business itself, I don't think there is any challenge.
With Mukesh Ambani continuing as the CMD for the next 5 years, Reliance has ensured that continuity is maintained despite the transition. However, while the AGM drove home Reliance's focus on leadership succession, it stopped short of providing details on its fresh new ventures or the investments already in the pipeline. Instead of indicating a time frame for the much-awaited initial public offerings, Ambani Sr. announced new capital-intensive plans on AI, geo-air fiber, expansion of Reliance Retail to other parts of Asia and Africa, and more investment in gas exploration. These are in addition to the capital required for 100 gigawatts of clean energy generation by 2030 and a nationwide 5G rollout by December. Experts point out that Mukesh Ambani's decision to stay on and mentor the future Reliance leaders is in the right direction. However, they insist that more clarity is needed on the rollout of products and services that the tycoon has already promised.
With over $150 billion worth of investment over the past decade, Reliance clearly is eyeing for the moon. Moving on, the Earth's natural satellite was in the news recently. ISRO's Chandrayaan-3 landed at the moon's far side on August 23, catapulting India in the league of select 4 nations which have reached there. Scientists of ISRO were hailed for this feat. But what about DRDO, which develops defense technologies and products needed by armed forces? Of late, it has been criticized for delayed projects. But the government has now decided to revamp this premier research agency. So can DRDO replicate ISRO's success? Abhijit Kumar brings you the answer. Just over a week before the crucial G20 summit, China on Monday released the 2023 edition of what it called Standard Map, showing Arunachal Pradesh as part of its own territory. Surrounded by 2 hostile nations, China in the north and Pakistan in the west, India has to do a lot more than lodging protests to protect its interest. And that's where DRDO comes in. Established in 1958, the Defense Research and Development Organization, or DRDO, operates under the Ministry of Defense. It is entrusted with the critical task of designing, developing, and enhancing defense technologies. It is a network of more than 50 laboratories which are engaged in developing defense technologies covering various disciplines like aeronautics, combat vehicles, engineering systems, missiles, naval systems, life sciences, and agriculture. Presently, the organization is backed by over 5,000 scientists and about 25,000 other scientific, technical, and supporting personnel. One of its achievements is the Integrated Guided Missile Development Program, which was the brainchild of APJ Abdul Kalam. Under it, several missiles like Prithvi, Agni, and the latest Nag were developed. From making hand sanitizers and masks during COVID to providing research and innovation in military technologies, DRDO has been doing it all. But the organization has come under criticism from time to time over project delays and for shooting over the allotted budget. Last year, a CAG report had also flagged irregular closure of projects, declaring them successful despite non-achievement of one or more key objectives and parameters. In March this year, the Centre informed the Parliament that 23 of the high-priority 55 projects taken under the mission mode category had missed their deadlines. Now the government has decided to revamp the organisation. For that, the Ministry of Defence recently set up a 9-member committee under the chairmanship of K. Vijay Raghavan, the former Principal Scientific Advisor to the government. An Isro scientist has also been included in the committee. The panel has been tasked with coming up with a list of recommendations within 3 months to restructure the role of DRDO. But what has been ailing DRDO?
This organization has been a victim of historical baggage. For the first couple of decades, this was the only go-to agency of the government for defense R&D, and the policies within which it operated were fuzzy in the sense that it was supposed to do everything: indigenization, developing state-of-the-art technology, and so on. There was a time when it had a finger in every pie, right? So it became too big an organization, unrealistic expectations that, within very limited budget, the DRDO will, somehow produce spectacular results. Then you had this problem of, the services being too demanding. And DRDO itself, on its part, little inclination to review the projects which are not doing well and to, kind of exit them. Most importantly, the budget allocations for defense R&D have been quite dismal.
The government plans to introduce changes in tune with the US Defense Advanced Research Projects Agency, or DARPA model, which was set up in the same year as DRDO and is a dedicated wing engaged in actively funding and researching innovative defense technologies. So will the revamp bring a decisive change in the approach of DRDO?
The one line in the government declaration was DARPA and DRDO. Now, DARPA and DRDO are two completely different elements. DARPA is 500 people, 600 people, project managers. They define and they work with the industry. And they even have programs which very clearly are to find out the technology limits. And there is a tierization of what the ultimate objective is. You do not even have that kind of a scientific thinking. You don't even have the knowledge to define those projects. So you can do lip service. You can do lip service, which is what we are very, very good at. We are so window dressing sensitive today. So we do things to tick. That needs to stop.
According to a statement by the Indian Defence Research Wing, the revamp will focus on shedding certain ongoing tasks that can be managed by academia or private players. The DRDO's focus will shift towards high-end futuristic technologies in air, ground, maritime and space systems. So will DRDO be able to emulate the success of Isro?
It's not a foregone conclusion that the Isro model can be replicated in defense. Isro is focused only on one area of research. Unlike DRDO, which is into everything, the attention gets diffused. Secondly, Isro doesn't have an external client, whereas DRDO is catering to its clients, namely the services, which are very demanding. The DRDO has suffered from, I think, excessive bureaucratic control, both in terms of financial control and administrative control. Also, Isro has really learned to live with the limited budgets.
Although DRDO has been subjected to multiple hurdles, experts believe that a streamlined approach towards building high-end military technology and a focus on innovation will reap rewards for the armed forces. The revamp promises an effective change in DRDO, but to compare its successes with Isro would be unfair on both the organizations as they operate in extremely different domains. DRDO may return to its glory days if all goes well. Meanwhile, it seems destiny smiled at good old movie theatres, which were struggling to attract people for a while now. Bumper set of movie releases have propelled shares of PVR-Inox 13% higher in the past 1 month. However, will the rally sustain going forward? What should be your investment strategy? Lovisha Darad brings you a detailed report.
Investors have flocked to shares of PVR-Inox in the past few weeks amid a slew of blockbuster movie releases. Over the past 1 month, the stock of this multiplex operator has surged 13% as against 2% fall in the Sensex benchmark. Analysts link this stock outperformance to bumper box office collections of Gadar 2, Jailer and OMG 2. So far, these three films have clocked a total of Rs 1,358 crore gross box office collection worldwide, suggested reports. With 6 more films like Jawan, The Great Indian Family slated to release by the end of September, analysts believe that the stock of PVR-Inox has more legs to rally.
With 1 month to go and Jawan expected to release on 7th of September, I think the collections are bound to rise sharply in this quarter. I mean, if you look at PVR in the last quarter, the footfalls were about 3.3 crores, and given how the performance has been so far in this quarter, I believe that the run rate should be far higher than what it was in the previous quarter. So given such a strong content pipeline, we believe that the momentum in the multiplexes will continue from here on, and we maintain our positive bias on the space and maintain buy on PVR.
Receding concerns around digital disruption by OTT players too is expected to trigger stocks re-rating going ahead. Analysts at GM Financial in their recent note wrote that the recent recovery in box office collection of movies suggests that movie viewership on OTT may not come at the expense of theatres. A successful movie at the box office increases its appeal on the OTT platform. Hence, OTT and theatrical releases can coexist and mutually benefit each other. That apart, given PVR-Inox is the sole listed multiplex player, analysts expect cost efficiencies stemming from merger synergies to bode well for the company in the upcoming quarters.
A strong pipeline of some megastar movies slated to be released later in the year, cost efficiencies which have been implemented, and better average ticket price and spending per head means that the screen economics is viable for PVR even at structurally lower occupancies. The stock has risen well so far, and after a brief correction or consolidation may seek higher levels going forward.
From an investment standpoint, analysts at UBS shared a buy call for PVR-Inox given strong content pipeline for the festive season. Those at ICICI Securities too remain bullish on the stock's prospects, sharing a target price of Rs 2,240 per share. Overall, analysts expect an uptrend in shares of PVR-Inox to sustain in the near term as well. Markets on Wednesday, August 30, will follow global trends, foreign flows, and crude prices.
He's making plans for an early retirement. Business Standard.
Movie theatres and the entertainment industry, meanwhile, are trying hard to adapt to new challenges, like all companies do when faced with tough times. Some of them are now resorting to new ways to cut costs, like quiet cutting or quiet hiring. But what are these terms? Vasudha Mukherjee offers an insight.
Under quiet cutting, companies remove positions but do not lay off employees working in those positions. This leads to employees being reshuffled and moved around the company. Big corporations such as Adidas, Adobe, IBM, and Salesforce have resorted to this, using terms such as reassignment to explain this restructuring. Employers say that reassignment is now a significant part of workplace dynamics. Companies do not want to lose talent and are looking for ways to fill future positions that are better aligned with their long-term goals. Keeping old employees and reassigning them to new positions is also cost-effective for organizations. However, many employees do not know how to come to terms with this new situation. On one hand, there is the relief of retaining a job in a highly volatile job market. At the same time, many feel that employers are trying to push them out and trying to make them quit to avoid paying a severance package. Legal options are also limited to employees in these situations, as it may be difficult to prove malice or bad intentions on the employer's behalf. Quiet firing happens when managers fail to support employees by not providing them with proper coaching or skilling and withhold recognition for their work, leading employees to quit their jobs. Although there are cases where this may not be intentional and happen due to poor management, these practices can negatively impact productivity, growth, and employee satisfaction. They can also harm a company's reputation. In February 2023, the term quiet hiring also began to trend. This referred to companies acquiring new skilled employees without hiring new talent. This can refer to hiring short-term contractors or assigning additional responsibilities to existing employees that go beyond their job roles. It can also include moving employees to new positions. Finding new talent can be time-consuming and expensive for organizations. Quiet cutting and quiet hiring allow companies to leverage internal talent to meet immediate requirements. However, this is only possible if employees are also being properly upskilled, coached, and trained for the new roles they are asked to perform. While some companies may be genuine in the reassignments to keep employees on board and avoid layoffs, others may be pushing workers into unsuitable roles, prompting them to quit. The quality of support provided to employees during the reassignment may also make it clearer whether this is a form of quiet hiring or quiet firing.
I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Meanwhile, in a good news on the global front, US-based companies announced 42% fewer job cuts in July than they did in June. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.